Hello, today is September 12th, 2024, and it's time for a new stock pick video. I'll first do a overview of the financial and economic conditions, and then give you my new stock picks based on the merits of the individual companies and as well as how they fit in this economic environment. Over the last couple of years, after first easing a fair bit in monetary policy, the US Fed raised interest rates from 0% post-COVID to over 5%. Typically, that leads to a slowdown in economic activity because 2/3 of the economy is the consumer, and consumer finances things like housing, through mortgages, and transportation through car loans. And as the interest rate on these loans gets higher, it is more expensive to service those loans, and as a result there is less money left in the consumer's pocket to spend on other things. So there is a lag in that kind of slowdown from the time the Fed raises rates to when it actually happens. It could be 18 months or longer or a little bit shorter. What we've had at this time was a fiscal stimulus with the especially the US government spending a fair bit of money on various things through the Inflation Reduction Act, and especially deficit spending, meaning they spend more money than they bring in from tax revenue. And that government spending counteracted the expected slowdown from the consumer. So we've had a reasonably strong economy and stock market. Now, typically what happens, if history is to guide us, when the Fed cuts for the first time, a bear market follows, meaning a correction in the stock market, and it typically lasts about 12 months, and the typical throwdown, as they call it, the largest difference from the high to the low is just under 30%. Sounds like a lot and scary, but stock markets do these sort of gyrations. But I think this time may be a little bit different, may not be as bad, because governments, especially the US again, are expected to continue with their spending, regardless in fact of which administration gets the White House, whether it's a Harris administration or Trump administration. They're both expected to continue spending. So it makes very little difference the election in November from the point of view of deficit spending. That makes a difference in other ways, but from our perspective here as investors, it doesn't make that much of a difference. So with that in mind, it's a good idea to have some consumer staples or more stable companies, stalwart type companies in the portfolio, or emphasize those for the next 12 months, and perhaps underweight the more cyclical companies, the ones that are more affected by what happens in the economy. But like I said already, this timing may be a little bit different than previous rate cutting cycles by the US Fed. So my first stock pick for September 2024, for the next 12 months and beyond, is going to be Bristol Myers Squibb. It's a large pharmaceutical company, a large portfolio of products. The stock has underperformed the market for the last several years, actually, but that's actually, from my perspective, a good thing, because the valuation is now more reasonable. The business is still doing well, and the stock is still fairly expensive, but the valuation is now more reasonable. And in fact, in times of market corrections in the stock market, the healthcare sector is one sector that tends to do well. So, but regardless of that, here's a case where we can have a good company at a good price And regardless of what happens in the stock market over the next 12 months, it's good to hold it for the next 10 years probably. Same goes for stock pick number 2. It's more of a consumer staple, Calm Foods, symbol CALM. They actually produce shell eggs, like chicken eggs, selling them to grocery store chains, and they have nutritionally enhanced, cage-free, organic, and brown eggs. These sort of companies, I mean, they do well regardless of economic conditions, if the business is sound. So the industry that they're in should do reasonably well regardless. So the question here is this a good company? And I think it is. It's had a pretty stable profitability in its history in the last 10 years or so, with the exception of 1 year, 2017. I see here where it lost money. Every other year it's been pretty profitable. Hopefully it continues to do so in the future, and again the price is reasonable, so it should be a great company to own for the long term. My third stock pick is going to be a transportation company, BWLPG, symbol BWLP. This is a shipping company that primarily ships liquefied petroleum gas. So it's an energy transportation company, tankers and the like. This is more cyclical, so it should get affected by a slowdown, not in a good way. However, the company has been very profitable. Yes, it does get affected in economic slowdowns, but we need to own companies that can do well in better economic environment as well, and energy needs are going to be here for the foreseeable future, and somebody needs to transport this energy, and they are a very good profitable company, and hopefully will do well holding it. As always, if you'd like an opinion as to whether these fit into your diversified portfolio already, or if you have any other investment questions, please don't hesitate to give us a call. Thank you. Have a great day.